Welcome to our special coverage here from Davos 2026. I'm Shireen Bhan. As I've been pointing out, this year we have the largest representation of Indian states here in Davos pitching the India story. But perhaps the first Indian state and the first Indian chief minister who made a pitch here to investors in Davos way back in the day was Chandrababu Naidu and the state of Andhra Pradesh. And of course, they are Davos regulars. Joining me now for a conversation here in Davos on what the future for the state holds, the deals that have already been done, but more importantly, the conversations that are open and are hot. Joining me is Nara Lokesh. Nara, many thanks for joining us and great to have you back with us here in Davos. You did do a lot of deals, not in Davos last year, but outside of Davos, but on the back of conversations that may have happened here in Davos. So I know Davos is not about deals for you, as you say, but it's about conversations. So which conversations are looking likely that they will lead to deals?
Thank you very much for having us here. It's always good to be back. No, Andhra Pradesh views Davos twofold. One is we're here to learn, we're here to understand what are the sectors that are hot, how things are going to roll out, where are investments flowing into. And last year we started a lot of conversations across various sectors here, and you've seen announcements, groundbreaking, and so on and so forth already. So a lot of conversations have started. You'll hear good news in the next 90 days.
In the next 90 days? That's a specific time frame?
Absolutely. In Andhra Pradesh, we are all about speed of doing business. So for us, 90 days is good.
What should we expect in the next 90 days across which sectors?
Across.
Because you have many economies that you're focusing on, from the maritime economy to, of course, the digital economy.
We have close to 22 clusters. So ranging from aqua, cement, renewable energy, all the way up to quantum. So we're looking at investments across all these sectors, across 22 clusters. So that's something that makes it exciting. And Andhra Pradesh is very cluster dependent. So we're very clear that all the companies of a certain sector should be in one cluster so that they can stand the test of time and make economies of scale meaningful. So that's been our focus. So you'll hear good news soon. Okay,
good news and a sizable investment amount as well, just as we saw with Google.
See, Andhra Pradesh just came out of the partnership summit. We worked with CI, there have been great announcements. We're now busy grounding all these announcements. And it's an ongoing fight, right? I mean, when states compete, India wins. And it's a really exciting time for India, where now we have close to 10 states here in Davos. And all of us are competing in different sectors. So it's very exciting.
Well, when states win, India wins. That's a nice way of putting it. But, specifically as far as your ambition on AI, your ambition on creating a quantum valley, etc. What can we expect now in terms of next steps, in terms of the next stage of announcements on each one of these?
No, I think, one is the high-tech industry, right? Yes, quantum, India's first 153 qubit quantum computer is going to land in Andhra Pradesh.
I believe this month.
This month, yes. And a lot of work around it is already gone in. We're working on the use cases for it, right? And that's been a lot of work already going in. Apart from that, we're also looking at sectors like even glass. How can we build a glass city, a space city, a drone city? So if you've seen, Skyroot has made a big announcement in terms of building a center now in Andhra Pradesh. So that's where, these 22 sectors are very, very important for us, very focused in terms of delivering. And a lot can happen over a cup of hot chocolate. So that's what we
How many cups of hot chocolate have you had?
So a lot can happen, and we've done it in the past. The entire conversation with Cognizant started here in Davos. Started with 8,000 employees committed, and now it's up to 25,000.
Did the conversation with TCS happen here in Davos as well?
Yes, in Davos, and really exciting in terms of new
How many more takers for that land policy and the IT policy that you've got in place?
The lift policy is very exciting. I think it's a very unique competitive advantage that we have built, where other states are unable to compete with us. It's open to Fortune 500 companies, and that's why I said in the next 90 days you'll hear a lot more announcements where companies are going to leverage on the lift policy.
On the lift policy specifically. So any more out-of-the-box ideas like the one that you announced where you're virtually giving away land for a rupee?
Well, that's just one part of it, right? So land is an important component, but it is one component. As a state, we believe in a very tight integration in our clusters. So a vertical and horizontal integration. Now, what I mean by verticals? What does it take to make an end product? Who are all the players in it? So I want the entire Rolodex. I'm building that entire ecosystem done. That's the vertical. The horizontal is where, again, my ministry, human resource development, plays a very important role. Is the talent pool there? Is it ready from day one? Are the testing facilities there? Are the certification facilities there? Is there the innovation ecosystem in that sector there? That's where this tight integration is something that Andhra Pradesh is offering. We already manufacture 50% of India's air conditioners. And with the 3 deals we have done, we'll be at 70%. So we have to do like this, a very tight integration across sectors.
So which clusters? You just...
Well, those are conversations from Davos, and we'll keep getting to it. For now, we've got a market to trade, 1 hour to go, and it's been another very weak session for our markets. Lower for the second consecutive session. No level is sacrosanct. Today, the Nifty is breached 25,400 mark on the way down. It's a good 200-point decline seen on the Nifty. For the sensex, it's nearly a 600-point fall. And the problem is the broader markets and the way it's collapsing now. We've got the mid-cap index down close to about 1,400 points. The Nifty small-cap index will also come up for you on your screen. It's also down nearly 2.5%, and the advanced decline ratio at 1:7. No sectoral index is currently in the green. All this it's a broad-based sell-off that we have at our hands right now. And the Dow futures will be reacting for the first time to the escalation seen with respect to tariffs in Greenland, annexure, etc. Europe was down 1.5%. We'll get the early rates in Europe. But the Dow futures is still down close to about 500 points.
Equity markets is not the place to be, it appears, Rima, in terms of investment. Just take a look at gold and silver. They're making fresh highs here again. I don't know who's buying silver at these prices, even gold for that matter. But one way up, and the only way to play it, I think, from a listed space is Hindustan Zinc, which tells you why. That's one of the few stocks that are trading in the green. But exciting 60 minutes coming up. We'll get you a lot of market opinion. And keep in mind, we have the weekly expiry as well to play out. So let's see whether or not, at least in the near term, that can provide some kind of support, or in fact, we see a bigger breakdown in the last 60 minutes. That said, let's welcome Mitesh Thakkar onto the show. Mitesh, you have been sounding a little bit skittish. We're trading below that 25,400. The problem is there's no kind of intraday big 50, 60 point bounce as well. Your view?
There's no audio. I can't hear you.
We can you hear us now? Am I audible? Nope, not audible. All right, so we'll wait by. Go back to Mitesh as we get that fixed. A couple of stocks, though, in the last few minutes that have tried to bat for the bulls. Steel companies, they're cutting their losses. You have JSW Steel that was down 2%. Now it's down close to 1%. Some measly recovery is what we are seeing. The big boy is HDFC Bank. Because that's trading in the green, that's where we're down only 200 points. If that was down in line with the market, we would have been down far more. And from the broader markets, Hindustan Zinc, that's the one that's flying away. Beautiful move on that particular name, currently at the high point of the day. Mitesh Thakkar is back with us. Mitesh, I was asking you, what's the trade on the index? I think the 25,400 mark is what you were looking at. Now we're around those levels, but there's no kind of intraday bounce that we have seen so far. Would you be brave enough to go ahead and buy the Nifty at current levels? Or do you think you'd rather go in closer to around the 200 EMA, which is close to around 300 points away from here?
Good afternoon. So I think, this is a very important support zone, this 25,400 to about 25,330. And we've kind of come off about 30 points off the low. So let's see, we still haven't, as you rightly said, we still haven't got a signal of a proper reversal or a proper bounce back. But given the fact that this range is not violated on the downside, I think that could happen later in the day. Let's not forget today is also expiry day. So the last 40, 45 minutes could be slightly different than what we have seen. But for the timing, since there's no sign of a bounce back, I have a sell call on Ashok Leyland. Sell with a stop at about 185 for targets of around 171. And Aurobindo Pharma is the sell as well. Keep a stop at about 1161.5. Look for targets of 1110.
Anything on the Nifty Bank? The Nifty Bank is also attempting a bit of a recovery. And as we speak, I think it's managed to claw above the 20-day moving average. So the Nifty's Bank now closer to 59,600. The 20-day moving average is 59,550. So it's trying to just, put its head above that level. Mitesh, is that... because even ICICI Bank has managed to get back into the green, Kotak Mahindra Bank, HDFC Bank, Nigel spoke about. Anything in this?
So, if somebody has to take, and since again, there is no sign of a reversal, it's just bouncing back from support. I think between the two indices, if somebody has to take a trade, I think the Nifty Bank is more appealing. Just keep a stop below today's low, which is roughly about 110 points lower from here. And a long can be taken, and on the upside around 60,000 is where traders can look at taking some profits.
Okay, all right, got that. Mitesh, you want to give us a few more stocks?
Yeah, I gave Ashok Leyland and Aurobindo. I think that's about it.
Got it. All right. Thanks a lot, Mitesh, for that. Well, let's give you a quick recap then in terms of what's going on in the F&O market. The Nifty is at a 3-month low, and we're clearly the structure on the Nifty is very, very weak. And once, we broke that 25,500 odd mark, we've seen a bit of a slide. Now, the important point is the 20 DMA. That comes in at around 25,100. That's the last support level you have in terms of technical levels, which is going to be a very, very important level, and you don't want that to breach. Otherwise, you're in for a deeper correction. The Nifty, well, that's moved down, but the Nifty Bank, that's the one that at least is defending the 20 DMA as well as the 50 DMA. The 50 DMA is closer to around the 59,100 odd mark, and the 20 DMA is at around 59,500. So at least for now, it's defending that band. The PCR, that's come to the lower end of the range. And we've seen in the past at the lower end of the range. 0.62 is when we have normally seen a bit of a bounce. For today, we need to get through the expiry as well. But normally 0.62 is when you at least get a relief rally. It may not be a bigger bounce, but some kind of relief rally. For today's session, the call writers are having a blast. Take a look at the 25,400 call. The premium is down close to around 92%. Last I checked, it was only around 15 rupees. So massive writing is what we're seeing out there. The bulls believe 25,500, that level is now becoming the new resistance mark. On the downside, the 25,350 put, if you bought it yesterday, you bought it at around 7 rupees approximately. Today, in fact, it's moved up a little bit. Currently, it's more or less flattish because now the time value of money is eroding the premium out there. Around an hour or so ago, it was at around 16 rupees. Individual stocks are unfocused. You just look at a couple of these reactions today, and that's telling you the mood of the market. Havells, the numbers weren't so bad. You could have easily said that the numbers are pretty okay. But the stock is down. There's massive shorting that we're seeing on that one. UPL, you were waiting some kind of value unlocking out there. And you said, well, the company should do well today. Stock is down 7%. Massive unwinding of long positions is what you're seeing. But thank God for a couple of stocks. HDFC Bank, that's seeing some fresh buying. That's holding one end up. And Dalmia Bharat as well. I was just reading a note coming in from Nomura. They are talking about, East outperforming from here on. And in an otherwise weak market, Dalmia Bharat is one of those stocks that are actually doing well. A few sessions ago on Bazaar, we were discussing that cement could be the sector to look at just in the near term because it's a domestic play. There are signs that pricing is improving a little bit and demand has been very strong. So that's one of the few stocks. Net, weak looking screen. We're playing out weekly expiry today. That 200 DMA, very, very important on the downside.
Indeed, that's at 25,100 approximately. But let's go across to Shireen now, who's in conversation with the TCS MD and CEO, K. Krithivasan, at the World Economic Forum in Davos.
Welcome back. You're watching our coverage here from Davos 2026. I'm Shireen Bhan, and a company that has the ambition of becoming the world's largest AI services tech company, TCS. That's the message that it is signaling to the world here in Davos. Joining us now to talk about that ambition and its plans going forward is the man in charge, K. Krithivasan. Krithi, always a pleasure. Many thanks for joining us here in a very cold Davos. But, let me start by asking you, Krithi, and the question everyone's asking is that, is there a shift that's now taking place internally to speed up your ambition, but more importantly, your aggression? I'll back this on two data points. The 700 million acquisition that you did, as well as the deal that you did with TPG. Is that an indication? Is that a sign of your animal spirits coming to life?
Definitely, Shireen. First of all, good morning or good evening to all your viewers. It's definitely what we, like you said, about 4 or 5 months ago, we looked at what should be our destiny in this. We said we have to be the world's largest AI-led services company. And then we have to back it up with certain actions. And we defined 5 pillars towards that. One obviously is how do we transform ourselves internally, how do we transform the services, how do we transform what we do for our customers. And the 5th pillar is how do we broaden our scope in the overall ecosystem. So that's where our interest in both building capability at speed and scale through mergers and acquisitions and also expanding the play with the AI data center, by which we are able to provide end-to-end capability to our customers. That's what we call infrastructure to intelligence. To our customers, we can service them across all layers of AI. We have offerings to them if they want infrastructure, if they want hardware design, if they want model as a service, if they want agentic AI capability or experience, right? So we can provide end to end. So that's the underlying philosophy through which we are approaching it, and that's what you're seeing some of the initial actions that we have taken.
You know, so this ambition of positioning yourself as the world's largest AI tech services company, I mean, who is currently the largest and who do you displace to become the world's largest? I mean, what does this mean exactly?
See, that's the reason. I don't know who is the largest, but everybody is at it and everybody is trying to be a pioneer. But we believe that setting a goalpost and vision for us will drive us every day, and more importantly, if you look at compared to year before, last year, there was still a lot of people wondering where is AI going, is it delivering real business benefit, and this year there's a very
No, but I'm just trying to understand, when you talk about the world's largest, what is the metric? I mean, you know, it's clearly not going to be people, revenue, I mean, what are we talking about?
This is the question. See, we define 5 pillars. Within 5 pillars, there are a number of sub-activities or sub-tasks we have defined for ourselves. So we'll keep measuring at each one of them for our internal purpose. But first time last quarter, we also declared what is our AI revenue.
Yeah.
Okay, so we continue to measure our AI revenue, how it grows. So all of them put together, like number of people, revenue, the partnerships we have, how are the analysts positioning us in this game, or it will be a composite metric.
You know, there's a debate on whether or not companies should actually report AI revenue, since everybody now says everything is AI. So whether it makes any sense to give a separate AI revenue line or not, people like Accenture not doing it anymore.
See, there are 2 dimensions. Everything is AI. For us also, it's true, like whether we do application development or whether we do business process outsourcing, there is an element of AI involved. But there's also element of AI involved, like if I'm reimagining the claims processing of my customer, insurance claim processing, how am I reimagining it using AI? Okay. There are things that cannot be done without AI. So there are things, for instance, we are doing a large migration from a mainframe to modern technology. Such things cannot be done without AI. So we have defined specific guardrail on what we would call as AI revenue, and we will stay disciplined, and we are going to be reporting that revenue. And of course, we are also training. Last quarter, we conducted a hackathon that involved about close to 300,000 associates over a 4-week period. All of them were immersed, they gave ideas, and then they built one of the largest in the world. So there are multiple things happening, and every one of them will take us towards the direction of being the world's largest.
You know, let's understand also what this means in terms of new bets, because as you pointed out, whether it was the acquisition, $700 million acquisition that you did, or the deal that you did with TPG, what can we expect on both those fronts? More deals like that likely for you?
Definitely, we are looking at where are the areas where we want to build capabilities, as I said, at speed. And with that, we have lined up a number of opportunities we are looking at. As they materialize, you will hear, but it's not that I'm going to be announcing 10 of them next quarter or anything, but we are looking at number of opportunities, but definitely we are more acquisitive than before.
More acquisitive than before, so how much could inorganic growth then provide a bump up as far as...
We are not looking at sharing, we are not, as I said, looking at inorganic growth as a revenue driver. Inorganic growth, as I said, is the ability to build the capability at speed and scale. But the revenue driver will be the synergy that we build. How are we able to leverage the larger TCS ecosystem and use the capability that we acquire to deliver benefits to our customer? We are not acquiring to increase our revenue.
Okay, not acquiring to increase your revenue, but let's talk a little bit about associates, because you've seen a fairly significant headcount reduction of 30,000 that you've already announced. Now, what are we given to understand your workforce could potentially look like going forward as you accelerate your ambition for growth?
Again, we've been reiterating this. AI is not taking away the jobs at this time. We are continuing to find, in fact, you look at what we are doing in the market, as much as you see our headcount reduced by previous quarter, it went down, I think, by 20 and now by 10. But otherwise, we have been hiring a lot in the market. And we also announced in the market that we want to have a future ready workforce. We provide all the ability and the support for our associates to learn and become proficient in these new technologies. There are few associates where we find like they may not be fit or ready for the future that we are charting for ourselves. We are providing them all the support and they are releasing some of them. But otherwise, we continue to hire from the colleges, we continue to hire from the market, we are not stopping hiring. So, as I said, at this time, we are not looking at AI shrinking our workforce at all.
What is the average revenue per employee today? And on the back of all the AI productivity gains, what do you anticipate that to be?
See, Sharon, we have not been publishing the revenue per employee, but we can calculate, like we've been giving all the numbers. And it will increase slowly. It's not a big increase, but it will show an increase over a period of time.
Well, what about growth? You know, all of this is ambitious. It's a plan that you have for the future. But in the near term, Kriti, growth has been a challenge. You have, of course, been lagging behind your peers as well. When do you see the mojo returning in the near term?
See, we are taking all the steps. We are very confident and we are not losing market share. We are winning enough in the market. There have been, so last year we had situation, that is FY26, we had situation in one or two verticals. We had announced that we had a one-off issue. And there were some verticals, overall the vertical sentiments have been low. But overall we are very confident and comfortable with the situation we are in, the kind of order book we have, the kind of deals that we are winning in the market, we are comfortable.
So let me end by asking you, in this pivot that you're making, where do you believe you find yourself today? And at the end of this calendar year or of the financial year, next financial year, where do you believe you will be positioned in terms of outcomes that you can share with us?
I don't want to put an outcome at this time, but as I said, we have definitely made a significant progress towards our journey to be the world's largest AI-led services company.
Okay.
That will be visible for you.
That will be visible a year down the line.
Absolutely.
That you're committing to.
Yes.
Okay.
Absolutely.
Kriti, always a pleasure. Many thanks for joining us here in Davos on CNBC-TV18, and we look forward to hearing more from you as you unveil more of your plans on this effort going forward. Thanks very much for your time.
Take care. Bye-bye.
Good to see you. Well, with that, it is time for us to take a quick break. The conversations will continue. Don't go anywhere. Back in a moment with plenty more. Stay tuned.
Welcome back. We're below 25,350, now extending the fall to a 250-point cut. Remember, this is also the Nifty weekly expiry. 40 minutes to go to wrap up what's been a very tough trading session. Jigar Misri, co-founder Buoyant Capital, is now joining in. Jigar, it's been 12 trading sessions so far since the start of the year, and we've been in the red for 8 of them. And this was the year when we were supposed to reverse some of last year's underperformance led by earnings momentum. What has happened? If you could just, lay out the setup for the markets from here.
Right. Good afternoon, Rima. So I think, there are two-pronged problems to this. One is sort of what's happening with the trade and related issues. And secondly, what we reckon is the central engine of India's growth coming under some bit of scrutiny. On the trade and related issues, on the face of it, it looks like a livable problem. You export an equivalent of 2% of GDP worth to the US. And if you assume half of that gets taken out for 6 months, a 50 basis points impact is not that material on GDP. However, what it does to the rupee is something that needs to be looked at, because we are now running a serious current account deficit at a time when FIs are selling and FDI is almost net zero. Right, so BOP is negative as well, and it's a vicious sort of circle we seem to have entered in. FIs will not enter unless the rupee and the overvaluation is taken care of, and rupee won't be taken care of until we have a trade deal, and therefore it's gone into a circular spiral, which needs some jolting out. In absence of that, or while we wait for that, the central engine of India's growth was the fact that center plus state plus PSU capex was growing at a very fast step, incrementally. And I think we've spoken about this at length over the last year, is that we are finding states are doing a lot more social spending compared to the capital spending that they used to do. And the central government, for the first time since COVID, is finding itself short of revenue to continue doing capex. So we are expecting the capital spending bill for this fiscal year as well getting slashed. If the central engine of growth, which was pulling up India's GDP higher, is slowing down, then you're seeing the impact of that in the quarterly numbers as well. It takes transition for an economy to go from capex to consumption, and we are not there yet. So I think if you combine both those events and then overlay flows on top of it, apparently FIs have sold, promoters have sold, companies have raised money, and the singular buyer is equities, which is is retail through mutual funds and retail direct. Now, traditionally, you would have seen SIP slow down after a year of underperformance, but this time around, even that is not happening. Otherwise, it would have been a much faster burn compared to the slow burn that we seem to be witnessing. So I think if the market sort of comes to a level where valuations become attractive, and we don't think we are there yet, especially in the small cap piece, I think it's sort of something that we'll continue to expect for the next few months as well.
Jigar, give us a few basic details. As you said, economics are not turning in favor of us. In fact, with the rupee weakening, it's putting us into a bigger problem. And also, we did have a good run, and now we're paused for breath. The question is, how low can we go from here? First, in the headline index, you're clearly telling us that in the broader markets, there is signs of frothiness. For y'all, how much cash are you sitting on? And how much do you think the headline index can correct? Because I think a month or so ago, everyone was talking about at least the headline index holding its own. And now we've corrected close to around 1,000 points from the recent top.
Right, Nigel. So while that's not very visible, but more than 60% of micro caps have fallen more than 25% from their highs. More than 20% small caps have fallen 25% from the 52-week highs, even in the previous case. So there is some amount of froth that has been cleaned out. But as I said, if you are going to see a situation where, the flows are holding the ball up, and if flows become challenging, then you will start questioning almost everything. To the second part of your question, as a fund, Nigel, we don't believe in owning a lot of cash. We prefer to lower the portfolio beta through our aggressive and defensive stances. We have been defensive for a while now, as you would have gathered over the last year that we have been having the conversations. We are still not there yet in terms of dialing the risk up, in our opinion. So it's a wait and watch even for us at the moment.
Some numbers you said for small caps, valuations need to correct a lot more. Can you break that up, sector by sector? What are the growth prospects? Where are the valuations looking high, especially in the small and mid cap universe?
Rima, so see, just before I answer your question, let me give you one more statistic. In that, see, more than 81% of the demat accounts operational today have come in post-COVID. Now, obviously, it's not a seamless one-way move up, but they have seen between 25 and 32% growth CAGR returns in Nifty. They've seen between 40 and 52% CAGR returns in small caps. Right. And that was the expectation with which a lot of this money came in. And obviously, you could show them a lot of data that 5 or a 10-year rolling return on large cap or small cap index is around 13%. But unless people sort of, experience it themselves, it's not going to come to a reality check for many of us. So that transition away from a 30% expectation to a 15% expectation will take its volatility along the way. And I think that's what we are experiencing today. To your question on where do we see, the growth and value emerging, again, if you're positioning the portfolio to deliver sort of 15, 17% returns, then a lot of sectors become very interesting. Now, we calculate that about 6 lakh crores or roughly 1.7% of GDP has moved in the hands of people away from the government coffers, state and center combined. That money is slowly getting sort of deposited into the bank. You're seeing the latest data for deposits grow. And clearly that is one place where almost all the sort of ducks are falling in row. So deposit growth is happening. It looks like we have already seen our last rate cuts and if not, maybe one more. So NIM compression is behind. Asset quality is largely okay, and essentially all the cycles are working okay. So financials is one sector which I think clearly stands out. Over the last 12 months or so, besides this, we have increased allocations to consumer discretionary at first, increasingly staples as well. And outside of this theme, I think pharmaceuticals continue to be our largest picks.
Jigar, what happened to the first love? Metals? What's the view out there, Jigar? You have seen many cycles like these, but this seems to be, quite a run that it's had. You talk about the index under pressure, and metals is normally high beta, but it's in a world of its own. There's plenty of excitement. I don't know when's the last time you saw Hindustan Zinc rally like this. Obviously, there's a float factor there, but Vedanta, even on bad days, we're not seeing the stock collapse, telling you that the street believes this metal cycle still has more legs to run.
Absolutely, Nigel. So one part of the story here clearly is the supply shocks we are likely witnessing. Copper complex is the first to give way, and we take Q as that being the barometer. But besides this, as we discussed, I think was it last month when we said that this is not just a play on the demand supply of individual commodities, as much as it's also a play on where people think dollar is going. Now, given that the Fed had printed almost 8 trillion worth of dollars since the GFC was not enough, they're using power across media, across spectrums in a way where increasingly this is getting yes, there's only one alternative, but we might as well explore others. So every country is trying to de-dollarize in its own way. If you are India, you'll do it through, say, gold and silver. If you're China, you'll do it through commodities. And there is also a factor where any limited supply commodity, when designated in a fiat currency, most notably the US dollar, will be inflationary over the time to come. Now, these are sectors which a wide gamut of people didn't like to own, and therefore there was always under ownership getting into that rally. But I think, that's a place that we have had significant exposure, and we continue to like a few of those names, Nigel.
Thank you. We leave the conversation here for now. The Nifty is hurtling lower now, 260 points down. Jay Bala of cashthechaos.com is now joining in. Jay, now it's more than 1,000-point rally from our all-time high levels of 26,373. More than 1,000 points. Just in the near term, in the broader term, over the medium term, you've given us the key markers on the way up, on the way down. But just in the near term, with this kind of a momentum on the way down, stocks are falling with very large volumes. Where are we headed?
Hi, Rima. And like I pointed out last week, the markets have a good possibility of going lower back to the August low of about 24,400, or maybe even slightly below that. So this is not something to be worried, in my opinion. We are still bullish on over the medium term. Once that decline is complete, I'm anticipating the market to resume its bullish uptrend. But so we have to stomach a little bit of headwinds in the short term, and this turbulence is par for the course from a technical perspective. As far as interim supports go, it's about 25,100. That's the important level for me. So because there are multiple possibilities for the markets in the short term, and none of it has an edge over the other. So if markets don't hold 25,100, then what I think is the base case, which is markets going back to the August low of 24,400 or slightly below it, I think that's going to play out. If 25,100 holds and the market can reverse from that, there is an alternate scenario that plays out that says that this dip is an even shallower dip than what I anticipated.
Okay, all right. Hi, Jay. No stopping the Nifty. I think this has an expiry-related factor that's playing out here. The 25,300 is gone decisively now. I think we have gone down to around 25,280. Jay, that said, the Nifty Bank, that was doing quite well. But in today's trading session, it's just marginally breached that 20 DMA. What's the view on this one? Because it's been outperforming. And I think it's still, only 1% away from the recent high that we saw. So can this bat for the bulls?
Yeah, it does look like that for the moment, Nigel. As long as the index can hold above 57,629, I think it's in a much better place than the broader markets, and so that's an important support level for me. But there are alternate scenarios that once 57,629, if it were to get breached, I think the markets would still be coming back to its major trend. But it may not be the banks that may be leading the markets. It could be autos and some other sector. So, but I don't think at the moment there is threat of this market dropping below 57,629. So watch 57,629 as an important support.
Okay, but just one quick question, Jay. For the time being, we were worried about the Indian markets and we were underperforming. What's the risk that the mother market corrects itself? The US markets, they've got used to any kind of dip gets bought into over there. But is there a risk in the US markets, NASDAQ, S&P, or do you think that the mother market continues to hold its own?
There's a greater possibility that the US markets continue to hold. Watch the December 17th low on all the big indices, NASDAQ, Dow Jones, and the S&P. As long as the indices stay above the December 17th low, the markets aren't in a risk of going much lower. But even if that were to break, there are two alternate possibilities at the moment. Either the markets are going to fresh record highs straight away and holds the December 17th low, or it goes back to revisits the November low as the Nifty revisits the August lows, and then all start resuming higher post that. So for the US markets, December 17th low is an important level. I don't recall it exactly for the S&P or the Dow Jones. But I think that will hold. In my opinion, the probability of U.S. markets going high, making fresh all-time highs sooner than later is more probable. But yeah, it's just a slight edge, though.
Just to put India's underperformance in context, since the start of 2026, and it's only been 20 days, in trading days probably 12, the Korean markets are up 15-16%. The Taiwanese markets are up 10%. The Japanese markets are up more than 5%. But India is down 3.5%. And in dollar terms, if you look at the rupee rupee depreciation, it would be a much larger fall and underperformance versus the emerging markets. Last year's trend of 2025 of India's underperformance has continued, at least in the start of 2025. Jay, but are you getting a sense of some sort of capitulation seen in the broader markets, in the mid-cap index going by the 1,400-point fall, and any stocks that you can identify where you are seeing a lot of momentum or they've broken some of the key support levels?
Rima, at this point, it's a bit difficult to play the market on the short side or the long side. But I have one short pick for the day. But be very, very measured in your approach here. I have a short call on Bank of Baroda. Bank of Baroda with a stop loss of 314. I'm anticipating it to drop to 276. See, once the Nifty were to break 2500, possibilities that we are straddling, two possibilities. One of them will become more obvious. So once 2500 breaks, we can get more aggressive on the short side, but that's only for the short term. So even the taking short position at this moment is a bit of a dicey call. But this is the clear call that I have for the moment. But again, it's not without risk. Nothing is without risk. But I anticipate things to get clearer when the markets either holds 2500 or breaks 2500.
Okay, all right, Jay, thanks a lot for joining in and giving us that view on the index. So maybe some downside in the near term. That 25,100 extremely important as per what Jay says. Otherwise, there's a possibility we go down to around 24,400. Slip into a short break, come back. As always, our technical experts will be back with us. Nowhere to hide. Markets continue to get a bit of a pounding now at the low point of the day. Mitesh Thakkar is back with us. Mitesh, you have some individual trading calls?
Yeah. So STBT on Concor, Discontinued Corporation, the stop at 504, target of around 490. And I'll still give one long call, BTST on Dalmia Bharat Cements. That's still trading well with a 2% gain. So take a stop at about 2185, look for targets of 2225.
Okay, got that, Mitesh. Let's take the discussion forward with regard to Dalmia Bharat then. Nuvama, well, they expect the Eastern cement market to outperform in FY27, which will be driven by a sharp pricing recovery after a steep correction that we've seen. They go on to point that over the past week, key cement players in the East India, they have begun pushing price increases as non-trade prices have already moved up and trade prices are expected to firm up further, which is supported by strong demand. It's important to note that actually the eastern region saw the sharpest knock on a quarterly basis. Pricing was down by roughly around 15 to around 16%, though part of the decline was because of the GST cut that we saw. And we did see demand as well was not very, very great. So East got the hardest hit in terms of pricing. And now Nuvama believes there's a good case that we see a recovery. Nuvama believes that the cycle now appears to be turning, particularly for the eastern players. Dealers, they are anticipating a 20 to 40 rupee price hike over the next few weeks across select eastern states. At the same time, demand as well, they point out, is showing early signs of recovery with, while regional realizations remain at cyclical lows, they're also saying that this calls for a strong rebound. Nuvama, Nomura, they expect a meaningful price recovery in the first quarter of FY27, with the East leading the upcycle. As a result, the companies with higher exposure to East region, well, they are best positioned to benefit. In particular, Dalmia Bharat as well as Nuvama, both of them stand out. That's where they've upped their target price in both these two names. And in fact, on Nuvoco, they had a sell rating earlier, a reduced rating. Now they have a buy rating. Those target prices as well come up for you. So, Rima, at least a couple of brokerages are positive on select spaces. From the cement space, Nomura has come out with this note, and they're positive on the eastern players that otherwise were lagging.
But right now, I think the specter of tariff tensions escalating are hurting global markets, and it's risk-off across the board. Pull up the European markets. We've got the early rates and 1.5% down on the CAC, DAX and the FTSE. And this follows Monday's trading session when, again, the frontline European indices were lower by approximately 1% or sometimes in excess of that. So Europe continues to see follow-on selling pressure. Dow futures, the last time I checked, was down close to about 500 points. Remember, Trump has threatened to slap an additional 200% tariff on French wine and champagne after France's president reportedly was unwilling to join the Board of Peace on Gaza. So just this rhetoric is hurting and causing a risk-off across global markets right now. For the Nifty, now 25,250 has also breached. Just in the last 30 minutes, we've seen 100 points, incremental 100 points being taken off the Nifty. But SRF numbers are flashing for you on your screen. At the bottom line, there looks to be a beat, 432 crore of a profit number, higher than expectations of 382 crore. So looks like a beat of 10 crore. But the market mood is such that SRF is still down 1%. We'll wait for the internals. Dr. Reddy's also on our radar, reports numbers tomorrow. Ekta joins in to tell us what's expected.
Well, for Dr. Reddy's this quarter, it is expected to be a slow quarter this time round. So the revenue is expected to be flat. We can expect a margin and profit decline this time. Now, the reason for that is mainly the US business, because the Revlimid generic cliff will actually take place. So we are seeing a lot more competition come through for the cancer drug. And hence you are seeing, depleted earnings from that, which would impact the US business on a high base. Also, we do have the pricing pressure along with the product mix in the US, which could be unfavorable for Dr. Reddy's. So there are estimates which are even predicting as much as over a 15-20% decline in the US business this quarter. That will result in terms of margin pressure that we could see for Dr. Reddy's. Separately, for the India business, expect around 10 to 12% growth this time. What would be crucial for Dr. Reddy's would be the commentary this time. So, for example, semaglutide, the launch in Canada, would be is very anticipated for Dr. Reddy's. So the street will watch out for any important commentary coming in with regards to that, as well as the US pipeline.
Thank you very much for that. Back to market technicals. Rohit Srivastava, founder India Charts and Strike Money, is now with us. Rohit, 1.5% down. It's more than 1,000 points lower on the sensex. What's your read of the fall today?
I think we are seeing global alignment to the downside. We are in very, very early stages of what might end up being a major or significant trend reversal in global equities. It's been a good ride, but I think it's gone away from what looked like only about trade to becoming a geopolitical problem. And geopolitics don't really resolve in a day or two, which means we have multi-month uncertainty now ahead of us. In short, it's not a good time to be in equities. You should create as much cash as you can. And that is what we are recommending to all our clients.
You're saying global equities itself, which have been resilient up until now through all of the bad news, every opportunity was used as a buy on dip approach, despite all the negative news on tariffs. You're saying that's reversing? Global markets are going to sell off? And how deep could the correction be?
Yes, I think global markets are getting ready. They're already selling off. I mean, we are seeing it in Europe. US was closed yesterday, so we didn't get the follow through from what is an ending structure. We'll probably see that today looking at the futures. you should prepare for a 10, 15, 20% kind of downside in global equities. And it's better to prepare for that and then think about it later. Sometimes people will come in and question, oh, will it be so much or will it be that much? I think what that approach does is it doesn't help you to prepare. So I would say prepare for the worst and then let's hope it doesn't get that bad.
Okay, all right. Hi, Rohit. Good. I mean, good to see you and hear your view as well. Sounding rather somber. But do you expect a couple of indices at least? In our markets, the metal index has done quite well. PSU indices are doing well. What if someone has positions out there? Would you say, take your money off the table, this market's going down, and then there will really be no place to hide. So if you're making money, take some money even of these sectors that actually have been outperforming.
PSUs have been very selective outperformers. The PSU index didn't make an all-time high. The only index that did was banking. The best performing sectors of the year were banking, metals, and autos. Metals is still holding on because, when we do long-term cycle analysis for these markets, essentially bond markets are the first that roll over, equities follow, and then commodities are last. So which is why you're probably seeing the commodity side of the market still holding on. You're also seeing a weak dollar today, so that is not really signaling you the risk of kind of pattern that you would see, which you're seeing in equities, but you're not seeing it in the dollar. Typically, if you had all world equities falling, you would have seen the dollar going up. So that's still supporting the commodity side of the trade. But like I said, equities go first, commodities are last. This pattern has been seen in most, previous major market peaks as well. So the commodity stocks might hold on a little longer, but they will not be a place to hide permanently. Once the markets, clearly once you've seen the downtrend take hold, you will see commodity, the metals market also roll over. So that's a risk to keep in mind.
Are you completely out of all your equity positions, or have you built short positions right now? And are you rotating into, say, precious metals?
So precious metals were the trade of last year. I've been trying to call a top on the PMs, but I think that will happen only when the dollar spikes. So essentially, I think there'll be a lag in the metal space. In equities, we've recommended 30 to 50% cash to clients, but personally, I'm 100% out of the market. And yeah, we have started recommending shorts as well.
Do you see the dollar index actually move up? Because that's been the saving grace, right? All of last year it was weak, which was good for most emerging markets. We underperformed even in that sort of a scenario. But do you see a risk that the dollar index, after correcting from 110 to around 98, now it's a possibility that it spurts up?
Yeah, that situation has developed. We haven't seen it yet, but when we look at the positioning in the CFTC futures market, the net non-commercial short positions are close to the highest that we have seen in probably at least 10 years. And that's been the typical setup of all the reversals we've seen in the dollar index in the past. So the positioning is there. In fact, it's interesting if you note what we call in technicals, we call this an intermarket divergence. It's classic Dow theory. When one market which is aligned with another doesn't confirm. So for example, we think that when the dollar falls, then commodity prices and gold and silver are supposed to go up. So the opposite of that is that if you're seeing new highs in gold and silver, are they supported by lower dollar prices? Now, we actually saw the bottom in the dollar index on 18th of September. We haven't seen a lower low in the dollar index since then. So in other words, the last quarter's gains in commodities and metals or precious metals have come without a lower low in the dollar. That is a major intermarket divergence, which is signaling that something will eventually turn in all of these markets. So it may be taking time, but the divergence is already there. So yes, I think the dollar index will turn and create that risk off that will be impacting markets and especially other asset classes apart from equities, which are already weakening. You'll see that. The only case to think about here is whether this will be a near-term dollar spike, which ends up being only a knee-jerk reaction, or can it become something bigger than that? Those are the two scenarios to consider.
Okay, just one more point. What about Brent crude? That's been very well behaved, which is good from an India perspective. There's a possibility that turns as well?
Probably not, because, it is part of the commodity complex. Unfortunately, has not participated in the commodity cycle on the way up. And if the commodity cycle turns down on the dollar, then the case for rising oil may not exist unless the geopolitics creates that scenario. So while that scenario may not exist on a pure demand, supply, and dollar basis, if the geopolitical situation worsens to getting closer to wars or other acquisitions around the world, then definitely oil could end up, moving to the upside, because that's what it does in those moments.
Okay, all right. Just Rohit, request you to stay with us. We need to look at the Nifty. The Nifty, forget about 25,400, 25,300. In this last 60 minutes itself, we have broken down decisively. And now I think we need to change that header. We are below the 25,200 mark because individual stocks, well, they have seen a big slide. A few of them should come up for you on the screen. I think Max Healthcare, that was in the green. That's again moved into the red. So I think as of now, there's just two stocks that are mildly in the green, HDFC Bank and Tata Consumer. But otherwise, intense selling pressure, Rima. The weekly expiry factor is playing out. And the breadth of the market that was as bad as 5 stocks declining to 1 stock that's advancing. Now you have close to around 7 stocks that are declining for 1 stock that's advancing.
In the morning, we were looking at what, 25,500. Will it be retested once again on the way down? And now, and at that point, 200-day moving average of 25,100 was seen as the support all the way down, 400 points lower. And now looks like, going by the fall in the last 1 hour, we could just test that 200-day moving average in today's trading session. 9 minutes to go. I think this is one trading session. The bulls will be happy to say, thank God, it's coming to an end. Do stay on, Rohit. We need to slip into a very short break. But as we do that, let's also get our viewers some of the opinion that we got earlier in the day. Rahul Sharma of JM Financial Services and Sanjay Mukin.
This is the second time we are breaching the 25,500 mark, which puts us into a place where a newer low could be established in this week itself. Technically, we are looking at the 25,200 level, which is where the 200-day EMA for the Nifty is. Essentially, a bounce back is something that can be expected from those levels, but that is for some other day. As of now, the trend seems to be down. The only two shining stars in this kind of a dull scenario is PSU banks and metals to a great extent. Apart from this, the market is lacking leadership, and whether it be it defensives, whether it be it IT or a stock like Reliance, all seems to be bearing the brunt of selling pressure.
It's not just the absolute that matters, it's the relative as well. Because when you're talking of, let's say, the low double-digit potential earnings growth for large caps in India, this comes in contrast with higher growth elsewhere in other sectors around the world in Asia. And you're looking at, or at least talking about, further potential currency weakness as well. So if you were to adjust the growth in dollar terms, then you'd find that in India, you were probably looking at mid to high single-digit dollar return on, or dollar growth in earnings for the next 12 odd months. And this contrasts with at least expectations of higher earnings elsewhere. And which is why you see this tone of, oh, nothing's happening and things are slow. I mean, they're not really slow, they're okay. But it's just the contrast of growth elsewhere being much higher that causes this tone in India, I think.
Welcome back. Screen is looking very, very scary as we speak. The Nifty has breached that 25,200 mark, while the Nifty Bank, which was holding on to the 20 DMA, that as well has got breached in today's trading session. And no stock, actually, from the Nifty is, able to hold its own. Rohit, sometimes, there are these various ratios that you look at, some of those technical levels as well. You would have spotted a few. We keep highlighting the FI net shorts that goes on getting built down. You have the PCR that's holding at around 0.6 odd. For the time being, all of these factors just ignored. Anything that you have observed?
So let me give you a lowdown on the FI positioning. I've used it forever to be a contrarian on the market, which means every time that they've been short, it's helped us in catching various bottoms in the market. But in the first week of January, something happened, or let's say over the last few weeks, something happened that was very, very different. So I'll just highlight it for people who've not understood it. And this is not the first time. It just happened at a smaller scale in COVID. So what happened in COVID is when the markets were, rushing up and down between 12,500 and 11,000 odd, where it made that last beat rally after the 25% tax cuts and into Jan of 2020 COVID. That's the first time when FIs did not cut their short positions significantly. I mean, they didn't go long. And moment the market rolled over in February, they were back to being short. In the first week of March, they had the highest short position ever at that point of time. So while we could have looked at that and said, well, the market will go up, we of course had COVID. And what kept them from adding to that short position was SEBI coming in and saying no more short positions. Okay, so that was around the 12th or 13th of March 2020. But essentially, that ended up being a directional trade. So while we mostly take a contrary view to the FI positioning, COVID was a directional trade where they were short into the event. At the start of this year, there's something similar has happened. While they've been, short for quite a while, every time they had a position closer to 1,80,000, 2 lakh short, contract short, the market bounced back in September, in November, December. But at the start of Jan, we've actually sold off on a short positioning. And at that point, it starts to look directional. It starts to look exactly like it did in COVID, where the market's falling and you have a short position which is getting added up. So it was pointing to some event that may be ahead of us. We just didn't know what it was because we don't know anything about COVID now. That's behind us. But this weekend has, of course, given us the event, right? This geopolitical news around Greenland, while it might sound like a small thing, I think it's probably ends up being the biggest geopolitical factor for the rest of the year, or I don't know how long, because it sort of destabilizes the whole world in the way that it was in the past. So it's a big uncertainty for markets to deal with, and I think it explains the directional short that they're holding and adding to on the way down. So that's a big difference in the way the data is right now. So we can't look at it and see that it's going to bounce back because they're short.
Got it. All right. Thanks, Rohit, for joining in and giving us that view. May not play out like the way it's played out in the past. So let's wind things down. Nifty goes home with a 350 rupee point cut. 25,200 because of the last 2 minutes recovery. We managed to, the final tick is above that, and the averages as well will actually be above that. But otherwise, an extremely weak trading session. 47 stocks from the Nifty itself end in the red, while you have various stocks, that are down 4 to around, 3.5 to 4% in today's trading session. Adani Enterprises, you had Bajaj Finance, Jio Financial, Eternal. All of them went home with cuts. From the broader markets as well, plenty of stocks sold off. UPL was down 8%. Oberoi Realty was down close to around 7%. LTI Mindtree as well did react on the downside. Now, some of these stocks, another day they would not get hit so hard. But that told you the mood of the market. And that's why these stocks got absolutely pummeled. Couple of places to hide. Hindustan Zinc numbers were pretty okay. Q4 will be even better. Valuations not cheap. But the street believes that silver could do well. And that's why that stock was up. And Dalmia Bharat as well, Nomura came out of the know. They believe East India will do well. It has high exposure out there, so that stock went home with some gains. The bears were on top on this weekly expiry. The bulls, will be wondering whether or not that 200 DMA can hold out. On that note, we'll wrap up on this edition of Closing Bell. You don't go anywhere. The team of Markets Forward is waiting by.